Many world-renowned entrepreneurs like Elon Musk and Robert Kiyosaki have warned the world about the Great Recession that's about to destroy our economy. This phenomenon will greatly affect everyone, be it the rich or the poor. But are you geared up when the recession comes? Here's what you need to know and do according to Robert Kiyosaki. I say crash landing, Robert Kiyosaki tweeted recently. I hope I am wrong, yet that is what I believe. He added that he has always been vocal about what he had to say about the expected recession on Twitter, on his podcast, and even on his YouTube channel. Welcome to Nova Society, the world's best finance channel for personal finance. Join our community, and let's stay connected. Renowned for his best-selling book Rich Dad, Poor Dad and as a prominent speaker on personal finance and entrepreneurship, Robert Kiyosaki has raised concerns about an upcoming market crash following the recent surge in layoffs at major companies like Google, Microsoft, Amazon, and Facebook. Here are the major things that Robert Kiyosaki is warning us about and how we could mitigate its effects. Robert Kiyosaki Recession Warning. For years now, Robert Kiyosaki has been known for issuing precautionary alerts about an impending market crash, driven by his belief that the current economic situation is unstable and an inevitable crash is on the horizon. In 2023, he intensified his warnings, emphasizing the severity of the global economic future. He raised questions to his subscribers about what could be worse than a Great Depression, and his response was a global recession. In February 2023, Kiyosaki tweeted, "Crash is here," citing the domino effect of layoffs in Silicon Valley, with thousands losing their jobs. He warned investors that everything, including the values of gold, silver, and Bitcoin, would decline. Despite the unfortunate global recession, Kiyosaki advised investors to be patient, as there are potential opportunities in gold, silver, and Bitcoin due to their increasing prices, which he linked to the struggles of the poor and middle class in America. Kiyosaki encouraged his followers to invest in silver, considering it God's money because it cannot be faked like paper currency. He stressed that real assets like gold, silver, and Bitcoin would retain value, while paper currencies might depreciate due to the Federal Reserve's potential increase in printing money to support the markets. According to Kiyosaki, 6 factors pose significant economic threats that could lead to a global recession, with debt being the primary concern. He emphasized the importance of preparing for potential economic turmoil and suggested considering tangible assets like gold, silver, and Bitcoin as a hedge against the uncertainties in the financial markets. Debt. Excessive debt represents one of the major challenges in the economy, according to Kiyosaki. Both individuals and governments have accumulated too much debt, making the financial system vulnerable to collapse. When debts become unmanageable, it can trigger an economic recession. For instance, if individuals, companies, or governments struggle to repay their loans, it can set off a chain reaction, leading to reduced spending, decreased economic activity, and ultimately a recession. A credit crunch can arise when banks and financial institutions suffer significant losses due to non-repayment of loans, making them more cautious about lending money. This situation, widespread across multiple countries, can result in a global economic recession, as witnessed during the 2008 financial crisis. Kiyosaki advises people to lower their debt levels and build up their cash reserves on a personal level. Holding cash on hand can enable individuals to capitalize on opportunities that arise during a market crash. By reducing debt and having available cash, people can better navigate economic downturns and seize potential opportunities. Inflation. Inflation refers to a continuous increase in the general price level of goods and services within an economy over time. This rise in prices is often caused by factors such as an increase in the money supply, a decrease in the supply of goods and services, or an upsurge in demand. The author expresses concern about the impact of inflation on the economy, particularly how it affects the working class. The author points out that certain policies, such as the shutdown of the Excel pipeline, can contribute to inflation by increasing the price of oil. The author believes that the current global inflation rate, if left unchecked, could lead to significant negative economic consequences. Central bank policies, like low interest rates and quantitative easing, are cited as potential contributors to higher inflation rates. Such inflation can diminish the value of people's savings and investments, reducing the purchasing power of consumers and potentially leading to higher interest rates. Additionally, inflation can create uncertainty and instability in financial markets, ultimately leading to a recession. Economic imbalances. Kiyosaki expresses concern about the widening gap between the rich and the poor, which occurs when there is an unequal distribution of resources or wealth within an economy. This disparity can lead to instability and insecurity for certain groups. He argues that the current economic system tends to favor the wealthy, resulting in social and economic instability. It's time for the poor to get rich, he said. Stocks, bonds, mutual funds, ETF, and real estate crashing is predicted. Millions will be wiped out. But thousands of the poor and middle class will become incredibly wealthy. As he said in an email blast in 2022 to his followers. When wealth becomes concentrated in the hands of a few, it can lead to reduced consumer spending as most people have less disposable income. This decrease in consumer spending, in turn, results in lower demand for goods and services, leading to reduced profits for businesses and potentially causing a recession. Furthermore, income inequality can hinder social mobility, as those in lower income brackets often have limited access to education and opportunities for advancement. Such an economic imbalance can lead to decreased productivity and innovation in the long run, negatively impacting the global economy. External shocks. For Kiyosaki, these events can encompass pandemics, natural disasters, geopolitical occurrences, or other unexpected changes that can disrupt supply chains and impact the economy. For example, the COVID-19 pandemic, which emerged in early 2020, significantly affected the global economy. Various countries implemented lockdown measures to control the spread of the virus, resulting in business closures, reduced consumer spending, and increased unemployment rates. As he said, the coronavirus and the coming crash financial collapse possibly marks the end of the industrial age and the beginning of the information age. It's a very big move, and the people that are in trouble today are people still stuck in industrial age thoughts. The COVID-19 pandemic disrupted global supply chains, and travel restrictions severely impacted the tourism industry. It also brought to light existing economic inequalities and weaknesses in healthcare systems worldwide. Though many countries have since lifted these measures, the global economy is still in the process of fully recovering from the pandemic's economic repercussions. Additionally, geopolitical events like trade wars or conflicts between nations can significantly influence the global economy. For instance, the ongoing conflict between Russia and Ukraine has caused economic disruptions in those countries and other parts of the world. This war has contributed to the increasing global oil prices, given Ukraine's crucial role as a transit route for Russian gas exports to Europe. The current sanctions imposed by the USA and Europe on Russian oil, coupled with energy flow disruptions, have resulted in a significant shortage of oil, driving up commodity prices. As a consequence, these events can lead to disruptions in global trade, create uncertainty, and subsequently lead to reduced investment and slower economic growth. Policy failures. Inadequate economic policies, corruption, or ineffective policy implementation can give rise to economic issues. These policy failures can occur at different levels of governance, spanning from local to national and international arenas. They may manifest in various ways, such as insufficient regulation of financial markets, mismanagement of fiscal matters, ineffective trade policies, or insufficient investment in critical areas like infrastructure and education. Persistent or worsening policy failures can result in economic instability, inequality, and even recession in the short term. The uncertainty stemming from these failures may discourage investment, leading to a contraction in economic activity. In the long term, policy failures can contribute to structural weaknesses within the economy, including low productivity, limited innovation, and unequal distribution of income and wealth. These weaknesses render the economy more susceptible to external shocks, such as global pandemics or sudden shifts in the geopolitical landscape. Lack of adequate financial literacy. Kiyosaki emphasizes the significance of financial education as a crucial factor in individuals' struggles with money-related decisions. Having a good understanding of personal finance empowers people to make informed choices regarding their investments, savings, and overall financial management. He criticizes the current education system for neglecting to teach essential financial concepts, stressing the need for broader financial literacy programs. The lack of financial education can extend beyond individual impacts and contribute to systemic economic issues. For instance, a sizable portion of the population being burdened by debt and unable to repay loans can have ripple effects on banks, financial institutions, and the overall economy. Additionally, the absence of financial literacy may lead to increased market volatility, as investors may make emotionally driven decisions rather than relying on sound financial principles. With those pressing issues that he has laid out for all of us to be aware of, Kiyosaki provided 4 key recommendations to prepare for market crashes, or what he has always warned us, the recession, recognizing that these occurrences are inherent in the natural cycle of the economy. By adopting a long-term mindset and implementing practical steps, individuals can protect themselves financially and be better equipped to weather such challenging economic circumstances. Build up an emergency fund. Kiyosaki advises us to establish a cash reserve that can cover a minimum of 6 months' worth of living expenses. This precautionary measure serves as a safety net in case of unexpected situations like job loss or financial challenges. To prepare for a potential financial crisis, it's crucial to devise a plan outlining how to navigate through difficult times. This plan might involve cutting expenses, exploring additional income streams, or downsizing as necessary. By building and maintaining an emergency fund, individuals can effectively prepare for the impact of an economic recession. This fund acts as a financial cushion, alleviating stress during uncertain periods, enabling them to seize advantageous opportunities, and reducing the likelihood of accumulating debt. Diversify your investments. Through his long-term experience in business and investments, Robert Kiyosaki recommends diversifying your investments by allocating them across various asset classes, such as stocks, bonds, real estate, and commodities. This strategy aims to reduce your vulnerability to a specific sector that could be heavily affected during an economic downturn. Robert Kiyosaki emphasizes the importance of investing in assets that generate passive cash flow, such as rental properties or dividend-paying stocks. These investments offer a consistent income stream, even in the event of an economic crash. Focus on financial literacy. He also emphasizes the significance of financial education, particularly when it comes to investing and entrepreneurship. By acquiring knowledge of money management and income generation, individuals can navigate economic fluctuations more effectively. Staying informed about economic news and trends is essential, and it is recommended to follow reputable sources for a better understanding of the economy's performance and any changes taking place. Seeking professional advice, such as consulting a financial advisor, can be valuable in safeguarding investments and preparing for potential economic downturns. According to him, financial education plays a crucial role in helping individuals protect their assets and achieve financial independence. Be prepared. Robert Kiyosaki stresses that there's a need to be prepared to capitalize on available opportunities during an economic downturn. Kiyosaki's advice centers around 2 key points: having cash on hand and acquiring the knowledge and skills for informed investment decisions. These recommendations highlight the importance of being proactive rather than reactive when it comes to managing one's finances during economic fluctuations. Having cash reserves readily available provides a safety net during times of uncertainty. It ensures individuals can cover immediate expenses and emergencies without having to rely solely on credit or loans. By maintaining cash reserves, one can navigate economic downturns with greater confidence and avoid falling into financial distress. Kiyosaki emphasizes the importance of being well-informed about economic trends and market dynamics. This knowledge allows individuals to make strategic investment decisions and identify opportunities that arise during market crashes. Being proactive in understanding economic developments empowers individuals to adjust their financial strategies and protect their assets. Building financial resilience is crucial in safeguarding one's financial stability during challenging times. It involves minimizing debt and diversifying investments across different asset classes. Tangible assets, such as real estate or precious metals, tend to hold their value better during market downturns, offering a level of protection for investors. So, Instead of just letting your money rest in the bank, why don't you follow his advice to spend it on assets that will help you prepare for whatever it is that may come? As we always say, it's better to be safe than sorry. Be wise enough like Robert Kiyosaki, and who knows? Maybe one day you will thank yourself for listening to a great person's advice, as it saved you big time from phenomena like emergencies and the recession. If you want to learn more about personal finance and generational wealth building strategies, visit our channel and subscribe for more enlightening videos to increase your wealth.